The world is standing on the edge of a massive economic shift. Inflation is rising everywhere. The US dollar is losing its power. And global uncertainty is breaking records. In 2025, every decision you make with your money will matter. Because the rules that worked for the last 20 years no longer apply. So, what's the smartest investment right now? Gold? Silver? Stocks? Crypto? Real estate? Stay with me, because by the end of this video, you'll understand what's really happening behind the scenes and why physical silver might be the most underrated asset of this decade. Let's start with the big picture. The global economy today looks stable on the surface, but underneath, it's shaking. Central banks are printing money faster than ever. Debt levels are at historic highs. And the cost of living, from rent to food, keeps climbing. People say inflation is under control, but is it really? Governments use clever math to make the numbers look smaller. But in real life, your grocery bill says the truth. Inflation isn't an accident. It's a tool, a hidden tax. The more dollars that exist, the less each one is worth. And right now, the dollar's value is being diluted on purpose. Here's where it gets interesting. The Federal Reserve, the most powerful central bank in the world, is about to change leadership. And the next Fed chair might be someone close to Donald Trump's circle. What does that mean? It means a complete shift in how money and interest rates are handled. Trump wants a weaker dollar to pay debt, but a weaker dollar has another consequence. It sends investors running toward gold and silver. When the world sees the dollar falling, confidence collapses. Governments and big funds sell US bonds. They start buying physical gold. Demand rises. Supply stays limited. And prices skyrocket. That's the domino effect we're heading toward. And it could start sooner than people expect. Everyone talks about gold. And yes, gold will rise. It's the classic safe haven. It always reacts when uncertainty grows. But there's something even more interesting: silver. Historically, the gold-to-silver ratio, that's how many ounces of silver equal 1 ounce of gold, was about 15 to 1. Today, it's around 82 to 1. That means silver is incredibly undervalued compared to gold. Think about it this way. If gold stays at $4,000 and silver just returns to its historical ratio, silver would need to rise above $260 an ounce. That's more than a 600% increase from current levels. And unlike gold, silver is not just a precious metal, it's industrial. It's used in solar panels, electric vehicles, electronics, and batteries. Every green technology needs it. Yet mining supply is shrinking. So you've got limited supply, growing demand, and extreme undervaluation. That's a recipe for a historic move. There's another wild card: geopolitical tension. Around the world, new conflicts are emerging. Trade wars, regional wars, cyber wars. History shows whenever fear rises, hard assets rise too. People run from paper promises to physical value. That's why gold and silver often move first, even before markets react. If another major conflict breaks out, or even the threat of one, investors will rush out of paper assets and into tangible ones. Let's talk about the two favorites of the last decade: stocks and crypto. Stocks have reached levels that make no logical sense. A single tweet from a politician can move a company's value more than its entire annual profit. That's not investing, that's gambling. The markets are inflated by cheap money, and artificial optimism. One wrong move, one political shift, one unexpected crisis, and the bubble pops. As for crypto, let's be honest. Blockchain is an amazing technology, but as an investment, most cryptocurrencies are nothing more than lines of code. No intrinsic value. No physical backup. If electricity stops or regulation changes, the asset disappears. Trading crypto can be a business, yes, but for long-term wealth preservation, it's just not reliable. Here's a critical point most people miss. Not all silver investments are equal. There's paper silver, ETFs, certificates, digital claims, and there's physical silver. Paper silver is convenient, but there's a hidden problem. The amount of paper silver in circulation is estimated to be 250 to 400 times larger than the actual physical silver available. That means if everyone tried to claim their silver at once, only a fraction could actually get it. So when the price really moves, those holding the real thing, coins, bars, bullion, will be the ones who benefit most. Now, what about real estate? In times of inflation, property tends to hold value, especially if you can lock in a low-interest, long-term loan. Because when the currency loses value, your fixed-rate mortgage becomes easier to pay back. You're repaying in cheaper dollars. That's why real estate, when financed wisely, can be a brilliant hedge against inflation. But there's a key step before that: saving enough capital. And here's the connection. While you build that savings, physical silver might be the smartest place to park your wealth. It's liquid, it's real, and it protects you from inflation while you prepare for that real estate move. So what happens next? As inflation rises and global confidence in the dollar drops, we'll see a massive shift of capital into real assets. Gold, silver, land, commodities, things that can't be printed. The world is waking up to the idea that fiat money, government money, is temporary. It only holds value as long as people believe in it. And that belief is starting to fade. History repeats itself. Empires rise, currencies fall, and those who hold tangible value always come out ahead. Don't wait for the headlines to confirm it. By the time the crowd notices, the opportunity is gone. Let's simplify this into a clear plan. Step 1. Understand that inflation is here to stay. Step 2. Protect your savings by converting some cash into physical assets, especially silver. Step 3. Accumulate steadily. Don't chase prices, build a position over time. Step 4. Once you have enough capital, look for low-rate, long-term real estate opportunities. This combination, saving in silver, investing in real estate, is the most logical and defensive approach for 2025 and beyond. The truth is, the economy isn't just about numbers. It's about trust. And trust is shifting away from paper promises toward real value. We're entering a new monetary era. Those who prepare now will not only survive it, they'll thrive in it. So ask yourself, when the next wave hits, what do you really want to hold? A digital promise or something you can touch, weigh, and own? If you found this video valuable, share it with someone who's still trusting the old system. The more people understand what's coming, the better prepared we all become. If this helped you see things differently, drop a comment and it will answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit. It moves.